Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant at thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, we're a day late this week, and as such, we're recording this after Tiff Macklem of the Bank of Canada. And I always thought the name Tiff Macklem sounds like a hockey character you might see on a CBC show. Anyway, Tiff made a presentation and answered questions about Canada's housing market. What were your thoughts on his comments that 2016 and 17 recorded more exuberance than right now?
Well, I think he just let in about 4 goals. As a hockey player, Jim, that you referenced in the question, he's a sieve. You know, that's how what I would have called him as a young guy playing hockey. His commentary just defies logic and defies data. And it defies math. And it just continues to bring into focus the incompetence of people in this field when it comes to studying the home trading market. We're going to quit calling it the housing market, by the way, Jim. We're going to start calling it what it actually is, which is a home trading market. He made comments, Jim, like the housing market right now doesn't have as much exuberance as the housing market in 2016 and 2017. So we assumed he was referencing British Columbia in 2016 and Ontario in 2017. And he was justifying that no changes needed to take place because of that. So let me preface my follow-up with this. Governments, as we have said in this show over and over again for years, should never make a change to the home trading infrastructure except in the trough of a trading cycle. If a government makes a change outside of that trough, the collateral damage or consequential damage that is caused is hidden because you don't know how to read a housing market or home trading market from the trading cycle itself. Like, what planet am I on, Jim, where the top voice of the Bank of Canada publicly announces in front of a whole bunch of economists, technically the nation at large, a nation of reporters, journalists who've covered the Bank of Canada, some of them for decades, where he can make an outrageous statement like it's not as bad now as it was in 2016 or 2017. Like, what planet is this gentleman sitting on? I don't know, Jim. I don't know if the Bank of Canada actively lies to the Canadian public for some other means. I don't know if they actively lie. I know this is conspiracy theory. Or are they really this incompetent? In January, Canada as a nation experienced the greatest house price exuberance in its history. This is not debatable when you're measuring a housing market the way that we measure it. In January, the only way that you got the amount of house price illusion that was created in January, because the sales mix was so skewed at a level never before recorded from 1980 forward, that the greatest amount of house price illusion was created in that month for each home that was traded. The greatest amount of exuberance ever recorded in Canadian history happened just a few weeks ago when the Canadian real estate Association released. We have to go back, Jim, all the way till February of 2016 to find a period of exuberance that was only 2/3 of what it was just in this January. He went on to say to state myths as being facts. He basically regurgitated every talking point organized real estate has stated over the last few months, implying to the listeners that this was the truth. When I'm sitting here looking at the data and saying this is a lie, this is false, this is misleading, this is deceptive, this is the Bank of Canada on the record, the video, which is embedded in the Bank of Canada's own website, stating ridiculous comments like this. The housing markets were suppressed by the pandemic. Okay, that's what he said. Then he said, we didn't expect to see house prices rise as we came out of the lockdown. We didn't expect to see that amount of activity. He says in the next sentence, but there was pent-up demand after the lockdown. Okay, you admit that there was pent-up demand. You didn't say what that pent-up demand is. You just admitted it was there. And then you said, but shockingly, activity picked up after the lockdown. Well, if there was pent-up demand, if I got a herd of cows behind a cow gate, and somebody's whipping those cows, and all of a sudden someone opens the gate, those cows are going to trample you. Oh, you didn't think that was going to happen? What did you think they were going to do? All stand at the cow gate? Because that's what he said. He said, Canada is not one housing market. Well, it's not really one housing market. It's actually 10 provincial housing markets. Didn't mention that part. He mentioned real estate talking points. All real estate markets are local. There's no data that supports that conversation. There is no way to prove that as a fact. If he tried to prove it, we would debunk it. Bring forward your research. Bring forward your evidence. What else did he say? He said, the housing market is different. Condos in Toronto weren't selling, but single detached were high. And we say, that's not in the data. That's the talking points for people who don't know how to read MLS transactional data. That's true. He just went on repeating what people who don't know how to read transactional data have come up with as an excuse for their inability to read transactional data. Condos in Toronto were not slow. First-time buyers withdrew from the market. Yes, they're not stupid. There were home owners trading up the property ladder that were homeless. They moved up to the property ladder, which kicked someone else homeless. So they had to move up to the property ladder. So they kicked somebody else homeless, who again moved up the property ladder. And if that was true, wouldn't the average price go up? Because everybody was getting on the expensive end of the property ladder. The people who were buying expensive. Wouldn't that be true? Oh, no, but it's not exuberance. It's not. Don't worry, Canada. Don't worry, Canada. Of course, the reporters that asked the questions, you can see they don't understand how he can make these claims, but they don't have the data or the understanding or the training to challenge him. You have to understand, folks, the bragging point for him is that he has a PhD in economics. Now, I assume they're just throwing these PhDs around like they're a dime a dozen anymore, because the number of people who have PhDs in economics who don't even understand what a sales change is in the housing market, the largest asset class in the world, the asset class that drives household consumption, most economies in capitalist countries that have PhDs, defies logic. But I guess when you're handing out when one PhD is handing out a new PhD to the next PhD, this is the kind of nonsense that happens over time. You continually degrade the quality of your PhD, which clearly Mr. Macklin is displaying in this interview. A fundamental shift in housing demand. Wow. I think every real estate board across Canada, every MLS system across Canada, every failed real estate broker across Canada who goes on TV trying to drum up business, pretending they know what they don't know about housing markets, has used this excuse. Oh, it's a shift, a fundamental shift. Well, you want to know something, folks? After working with thousands of families over decades, and with many, many, many families right now. That shift has never changed. The preference has always been for single detached homes. The preference has always been for a backyard. Even people in their 70s who are living in a home with a backyard refuse to move to a condo that doesn't have one. They still want a backyard. This is not a change in shift. This is, as we've said in the show in the previous few months, this is late trading cycle behavior. Okay, you reach a point in a trading cycle where the only buyers that are left are those that are in the state of life where they're able to make a lifestyle choice to move to another community outside of where they're living now. Those late trading cycle moves have been repeated time and time again. You just haven't seen them recorded in this number since the late 1980s. How would you know this is true? Well, he should have said, well, the reason why house prices have increased in London, Ontario, at the record pace of 30% that they are, is because when one wealthy buyer from Toronto goes out and buys a $700,000 house, it means that the three earlier sales, $250,000, $350,000, $500,000, that normally are required to have that $700,000 house sell, didn't sell. So the average price to get the average amount of house in that sales chain was only $350,000. You do the math, folks. But in this case, because there was only one sale, the average was $700,000. That's why this happened. And because in London, Ontario, new home builders are listing their houses on the MLS system, and because new home builders are building extremely expensive houses in terms of the housing stock in London, Ontario, that too is now being recorded in the MLS average price. Didn't say a single word. That's what I took from this housing market. It started off with the Accountants Association out in Edmonton bragging that Tiff Macklem had a PhD of economics. This section of the show I will conclude with, this guy has a PhD in economics, and he doesn't even understand that Canada just set a record of house price exuberance that was beating the previous record by 50%. If that's all you need, if that's the quality of education that's providing PhDs in this country, I'm telling you folks, we have bigger things to worry about.
We'll have more with Ross Kay right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Welcome back. We're speaking with Ross Kay. Ross, the governor of the Bank of Canada yesterday admitted bids on bank debt were not meeting expectations. Mr. Macklem called this failure a good sign and stated that it was the result of earlier forecasts that didn't come true. We know CMHC made a historically incorrect forecast last May that similarly never came true about house prices. Seems like a lot of big-time people are making failed forecasts, Ross.
You know, and there's this little tiny firm in Burlington, Ontario, this little tiny firm with little tiny staff who knows exactly what's going to happen with debt, the consequences of the housing market, and who makes forecasts that you can trust. How is this possible, listeners? Look, what we do is not magic. We simply have the data. We know how to read that data, and we know how to apply it against how homes are traded in this country. That's all it is. It's nothing magic. I'm going to ask your listeners, the people who listen to the show today, go ahead to Google or DuckDuckGo, but probably Google is more fun in this case, and type in Canada mortgage debt forecast in your search bar. Go ahead, type it in and hit enter. You're going to see that there is not a single mortgage debt forecast that is supplied. In other words, on the first page of results, there is no Bank of Canada result that says Bank of Canada forecasts the total national mortgage debt will reach XYZ in June of this year. Now, there's this little firm in Burlington, Ontario, Canada, who does this magic calculation, Jim, which is called mortgage debt forecasting. Although we don't really call it forecasting, because our margin of error on a forecast, we only have to go with 1%. Okay? What I'm saying is, I'm not saying on the almost $1.8 billion or trillion dollars of mortgage debt. I'm talking about the mortgage debt that is going to be added over the next year. So not that great big number, 1%, only the 130, 140, 150 billion. I'm not going to tell you what that number is right now. That is going to be added in new mortgage originations, or is going to be added to the mortgage debt over the next year. We are only out 1% ever on that forecast. What I'm saying to your listeners is this: we are sitting here with a forecast for the amount of mortgage debt that is already done and will be recorded in June. There is no changing this number. The housing market could collapse, like a nuclear bomb could go off, stopping realtors from going out and selling houses tomorrow. And this number is not going to. This number is already recorded. It is the end of February, and this number is already done. There's no changing this number. Our forecast will be within 1%, a margin of error of 1% on this number. Why can we do this? Because we know how the sales mix is structured and has been structured over the preceding 6 months. Meaning, we know how the sales mix is going to still be moving forward over the next couple of months, which is all going to be reflected in a June mortgage debt total. This forecast is precise within 1%. There is no way that you can make a mistake on this forecast if you understand the underlying trading patterns that create this mortgage debt. Ross, why do you say you can time the housing market and other people out there will call you a liar that you can't do what you do? Well, guys, if you know how to forecast mortgage debt, if you know how to measure the sales mix, if you know where the sales chain is, if you know the number of sales that are still to be reported, you know months in advance of everyone else what a housing market is going to have to end up at. And then with each passing month, you're continuing to move your forecast even further out, on an equal number, and sometimes in a multiple number of months, because it depends on when the month is. And your accuracy is never wrong. Like, it's not wrong. Real estate boards may move some sales into the next month. They may count some sales from the previous month in the existing month. They may change their geographical area. They may change their MLS reporting rules between MLS systems. All those things can happen, but it's still not going to make you out more than 1%. Meaning, we can go back from 1980 till today, and we're never out more than 1%. But I'm Googling Canada mortgage debt forecast, and now I'm going to click on images. So I'm going from all to images. There is not a single mortgage debt forecast chart in this entire page. Why did the Bank of Canada yesterday, when they were asked, what do you think about the housing market? Why did they not tell Canadians, simply in order to maintain the prices that homes are trading hands for today, Canada must book XYZ amount of mortgage debt. Our national debt to income ratio is going to have to increase this amount. Certainly, we're assuming they have some way of forecasting income gains, or maybe it's going to be declines because of the when we finally see the consequence of this lockdown. So if they can do that one, they should be able to do mortgage debt if they're the Bank of Canada. Nope, no chart exists, folks. Apparently, the only chart in mortgage debt forecasting that has ever been created was this little tiny firm in Burlington, Ontario. Do you expect me to believe that? Do you expect me to believe that someone with a PhD in economics who leads the Bank of Canada, which governs the monetary policy technically of this nation, does not understand or does not have a calculation for what the mortgage debt will be recorded in June of this year? Is this a conspiracy theory? Do they have a special computer somewhere at the Bank of Canada where these charts and these numbers, this data, this forecasting exists, yet for the last 40 years they've never showed it to a single reporter? What we do is with a degree of mathematical precision that you can't do with anything else. We're talking about an asset class here in Canada, which is well over $6 trillion. The sheer magnitude of this asset class means it can't change overnight. The pent-up demand he talked about obviously was not pent-up demand. It was locked-down demand. It was the herd of cows behind the cattle doors being whipped up until those doors are opened again. That's not pent-up demand. Pent-up demand is when you have one door open, the other door closed, and it's been that way for the last 10 years, and the cows are continually waiting their turn to get through the gate. That's what pent-up demand is. And you can measure that demand because the number of cows behind the gate would be continuing to build up, and you would expect it to see at a rate that it had never been recorded before. Well, obviously, when you close both doors, the rate of demand doesn't change, but the number of cows waiting to get through the gate does. Where is the Canada Mortgage Debt Forecast report? Why does it not appear in a Bank of Canada report? If a little tiny firm with a little tiny staff in Burlington, Ontario, can forecast that with a 1% margin of error, now, 4 months later, we're talking the end of June, folks, when the Canadian banks are reporting the last quarter profits, we already knew what those numbers were almost a year ago. We can't be the only people who have that information. I'm not saying it's a conspiracy theory. What I'm saying is only two things can be true. One, they've got it, they've had it for years, and they've kept it hidden and secret. They've done that to control you, to control your behaviors, control how you interact with your money, control everything that you do in your life. Or B, they're ignorant to how a housing market functions and how reliable forecasting can be in a housing market. They are not qualified. They have not attained the knowledge. They have not spent the years and years of study required to gain a full understanding of how a housing market, home trading market functions. Only two things are possible. As I'm looking at this chart, as I'm looking at this Google search, and I cannot find a forecast chart where all forecasts are there, the margin of error of the misses, when the actual data comes in, does not appear. Why does that not appear? Why does the Bank of Canada believe they get to go on national television in front of a national media and make comments about a housing market that are lunatic, that are crazy? Well, they do it because the journalists don't know the questions to ask. The journalists have no training in housing markets either. The journalists believe someone with a PhD in economics who leads the Bank of Canada would not be opening his mouth and speaking without being sure what he's saying is the truth. The reason why CMHC was wrong was simply because they don't know how the home trading market functions and they don't know how to forecast going forward. The reason why the Bank of Canada is wrong. Why are they having a problem selling long-term mortgage debt. Oh, we were surprised. We didn't expect this to happen. Well, if you knew that the housing market was going to record the greatest level of average house price increases over the next few months, you never would have made that forecast in the first place. You would have understand that the rating agencies and the groups who buy bonds are going to misread the housing data exactly the same way you're going to misread it. And as a result, they're not going to want to take on that debt. They're not going to want to buy it because they believe there's going to be a better buying opportunity going forward. You should have built it. This should not have been a surprise, Jim. This should not have been a surprise. You give me a team like the Bank of Canada, and I'll tell you, if Joe in Nunavut decides to take a step out his front door, which foot he's going to take a step out the front door with. Obviously, a PhD in economics, it doesn't allow you to make an accurate forecast on who's going to buy up your mortgage debt, what your long-term government debt, what rates you're going to have to offer those people to buy up that debt, what that's going to do with mortgage rates because you're going to do it, what those mortgage rates are going to do with the home trading market because you're going to have to do it, and what the fallout is to the economy as a result of all those factors when it finally arrives in the average selling price. That's what I took from the missed forecasts.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Aven, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, we thought it was important to allow you to discuss any thoughts you had on this latest Bank of Canada presentation and media access event. What did we learn from it?
What I learned from it is this. All the lessons learned in the early 1990s obviously were lessons that weren't learned. The Bank of Canada now has a long history of their leaders going out into the public and making a series of ridiculous statements that they have no data to back them up. For us, Jim, it started with Carney. Okay, I had some great respect from the governors way back in the late 80s and early 90s because they didn't have access to the electronic access to data that you have available today. But by the time Carney took his role, everything he needed to know was available. Then there was Pollard, and now there's Macklin. The three stooges of housing markets, I think, is what we're going to brand them. When Macklin went out there and said, we're only now starting to see the signs of exuberance, we say, what are you talking about? And that it's not as big as 2016, 2017. We just shake our heads. What data are you looking at? What formula are you using to analyze your housing market? How can you go out there and tell the public something that is factually incorrect? Well, I guess it's possible that they don't have the data, they can't read the data, and they don't have the methodology required to read the outcomes of a home trading market. It's possible. It's possible. You know, as I've said on the show, Jim, since I have been struggling with this from 2010 for the last 10 years. I have been struggling that what we know about housing markets is actually something that's not known. I have been struggling with that. What I take from it is this: Young couples are going out. People in their 50s and 60s are going out, making a late life decision about home ownership. Young couples are making early life decisions about home ownership. They're all making these decisions, relying on the big voices that are out there to be telling them the truth. If they were telling you the truth, it all really comes down to this. Show us your forecasts. Show us your methodology and apply it to housing data over the last 40 years. Show it to us. Show it to the public. It can't be this complicated. Show it to us. Let that little firm in Burlington, Ontario, critique it publicly. Let them go ahead and debunk it if they can, or make them look like fools. Please, make us look like a fool. We would love it. You know, I come from a world where, you know, you don't take things personally. You know, working in sales for a couple of decades, if you took things personally, you would be a guaranteed failure. I don't take things personally. You know, if my wife says something to me, then I'm going to take that personally. My kids say something to me, and I got to do some internal review. Hey, yeah, I'm going to take that personally. If one of the kids that I coach says something to me, I've got to take that inside and figure out if what that child is saying is true. I got to take that personally. I don't take housing analysis personally. This is a mathematical certainty. Okay, there is no personal. If my calculations, if our methodologies, if our data is wrong, hey, go ahead, prove it. I'm okay with that. I'm not going to take it personally. I'll just say I was wrong. What's the problem saying you're wrong? You know, I say that I'm wrong every single day. You know, I go back to 2013 when our activity index for the first time recorded a drop of historic proportion in May of 2013, which to us said the housing market now is collapsing. This is the same pattern that has happened in years past. You know, and I was stupid enough to come out and say, hey, this is what I'm recording. Nobody asked us in July if that what we had recorded had reversed after POLAs took the reins, because obviously it reversed. The nice correction that we're going to experience back then was not only halted by POLAs, but reversed. Carney ran it up once, POLAs ran it up twice, and now Macklin, since his hire, he's run up the house prices. Like, let's be 100% honest here. The leader of the Bank of Canada have been the witness and a willing participant in the greatest amount of house price illusion ever recorded in our history. Yet they won't tell you what the consequence of that is. If we're going to record a $1 increase in the average price of a Canadian home, how much mortgage debt is going to have to be added to the national mortgage book? How much? We won't tell you. Well, I'm increasingly accepting they don't know. They don't know how easy these calculations are. What I took away from this presentation was this, Jim. I have become firmer in the value of our platform. We can save people thousands of dollars just by changing a couple of clauses in an offer. We can put tens of thousands of dollars in someone's bank account when they retire simply by moving across the street, telling them to move across the street. We can put hundreds of thousands of dollars in the retirement bank account by delivering to them a strategy that they can fact check themselves as they're going through the process to make sure that they're not making a mistake. The beautiful thing about where we are after this new presentation from the Bank of Canada is this. Clearly, we know something the Bank of Canada does not know. Clearly, we know where the housing market is going so far in advance of what the Bank of Canada knows. We could actually put on our brakes, take a holiday, and come back 3 months later and still be further ahead than where the Bank of Canada is.
So, Ross, my question is, the Bank of Canada doesn't have it right, so where is the housing market going?
Your housing market right now, Jim, in each MLS system across Canada is at a little bit of a different point. Okay? When those points converge, your housing market moves to a full-blown correction. Okay? Depending upon where those buyers move, in other words, they move from the Toronto MLS system, sell a home in the Toronto MLS system, purchase a home in the Hamilton MLS system, they sell a home in the Vancouver MLS system, purchase a home in the Abbotsford MLS system, in other words, the systems that govern those geographical areas. Those timelines can be a little bit different. What we know is this: unless someone believes the Canadians will take on over $170 billion of new mortgage debt in 2021, over $170 billion of new mortgage debt in 2021, the average price will be dropping. That's what we know. That's what I can share with you publicly. What I do know is that for every single housing market in Canada where people are looking to buy, where we say, yes, we have enough data to cover that market, which is, basically, 95% plus of the Canadian municipalities, we are able to forecast with a level of precision that we make the guarantees that we make. Look, if we're wrong, you don't have to pay nothing. We'll give you your money back. That's how it is. That's the beautiful part of being an advisor and not an agent. As an advisor, if you're wrong, you can get them the money back. As an agent, you can't. You can't. Because the money that you collect from them has to be at such an outrageous level because you fail so many times. We don't. We have never issued a refund since the Wealthy Homeowner launched. Never had to issue one. Okay. There have been people who thought they could get into our system to try to figure out what our housing market metrics are, and then subsequently found, we won't give them all the data that they want. We will give them the forecasts. We will explain things to them. Well, we're not going to give you our proprietary data. Yeah. And then, and this is generally realtors, Jim. This is generally realtors. They think they can back end us, but again, there's ways of finding out if it's a realtor who's applied for your program or not. Those people entered the regular membership by mistake. But we have no one in a program who has ever entered on nefarious purposes. So when you're asking me a question like, where's the housing market going, I'm always going to answer it this way. Okay, if you believe Canadians are willing to take on new mortgage debt in 2021 that will hit about a 30% higher record than at any time in Canadian history, then it's possible the average price will not decline. We don't see, but something, folks, your average price is already inflated because there's no first-time buyers in a market. The share of sales going to first-time buyers in January was the lowest on record in history. That means that the sales going forward, the sales increases going forward, are going to have to shrink until they become negative. That's the way it works. Unless a whole bunch of first-time buyers jump back into the market and set off the sales chain again. Every first-time buyer that's entered the Canadian housing market right now is causing over 4 more transactions to take place on average. That has never happened before. Okay, it just does not happen. It's unsustainable. Okay, you need first-time buyers entering the market because they take on enough mortgage debt, because they usually buy with 5 or 10% down, that the amount of funds, volume, that is flowing into the housing market can keep it going. When they're not moving into the market, experienced homeowners with each subsequent trade are not taking on the amount of mortgage debt a young first-time buyer is. They may increase their mortgage debt $100,000, $150,000, but they're not going to increase it the hundreds of thousands of dollars that's required to enter some of these major municipal housing markets. They're just not going to do it. They're not that foolish. They got into the market at a different time. Now, that being said, I don't think first-time buyers are foolish either. I think first-time buyers simply needed to be provided the information so that they can make a rational decision without anyone selling them anything. You don't need to be sold on the idea of whether or not you buy a house. You need to have the facts put out before you. You need to be provided time to review those facts and look at your life choices against them, and then decide if you want to enter the housing market. Okay? That's fine. If someone is told, hey, you're buying into the housing market at peak, but you have to understand you're only paying 19% interest, you can make that decision. If someone's buying a house and you say, hey, understand, if you buy in this side of the street, you're going to be $50,000 poorer 40 years from now. Hey, it's no problem. Just give them the information. Let them make the decision. It's their decision to make. That's why I won't give a firm forecast on this show, because if I told you where the housing market is going to be in June, how I tell you would need to be different for every listener for the show, okay? Unless you're a housing analyst, right? And hey, go do your own research. I don't really care. But if you're a home buyer or a homeowner looking to trade up the property ladder, how you interpret my forecast matters, because it's personal. It is going to make tens to hundreds of thousands of dollars of difference. Right now, Jim, our buyer program members on average over the next 40 years, the 40 years of ownership, are forecast to be over $380,000 richer than if they didn't use our programs. That's the average. Forecasts only matter when they're applied against your personal situation. If the Bank of Canada is able to make a forecast, they have in our opinion, they have an ethical responsibility to provide those forecasts to the Canadian public. If the Bank of Canada understands the amount of mortgage debt that is required to be booked over the next 12 months so that the average price is the same as what it is today, or that it doesn't go negative, they need to come forward and give people that forecast. Because our tax dollars pay for it. The Canadian public pays for it. If I pay for something, Jim, I expect to get something in return.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HoweStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.